Ladies and gentlemen, welcome back. You might be wondering why I'm wearing this winter coat. Well, the first reason is it's winter time, and the second reason is my heater's packed up. So you might be seeing me here in some snow-ready equipment over the next few days while I get that sorted out. So bear with me there, but it's good to be nice and warm while you're doing Bitcoin analysis, keeps the brain functioning, and that's what we're going to be doing today. So we'll look into the weekly candle close coming up in 13 hours. We'll also be looking into the hash ribbons cross coming up and how that could be ruined if we do not see an adequate weekly candle close. And then we'll discuss the range itself, what's happened with the range. We saw a big jump upwards on Bitcoin yesterday, a lot of Bitcoin related stuff going on in the USA. We had Donald Trump talking, RFK talking, Vivek Ramaswamy talking, a lot of people talking, Edward Snowden. They all talked at this massive event there and it led to price fluctuation. So we'll discuss a bit of that. We'll also look into Ethereum, we'll look into altcoins a little bit, all of this relating to the weekly candle close. And then we'll look into the Ethereum ETF and the current state of the Bitcoin ETFs. Now, I will warn you, this video will end with a bit of an indecisive tone. That's because we need to be waiting for this weekly candle ultimately, but I will give you an idea of what we need to be watching out for and how you can react to certain situations. So there is some utility here regardless. So ladies and gentlemen, we'll check out a few things and then we'll jump right into the content. Right, so first and foremost, Bitunix and BingX. We've got our exchanges here. Bitunix is a global non-KYC exchange. So is BingX. You can sign up to these exchanges from anywhere in the world. They're both very low in trading fees. They've both never been hacked before. And with my referral link down below, you can sign up with those links and get 15% trading fee discounts on top of the already low trading fees. So use my links down below. It helps you by getting on a good channel with an extra discount, and it helps out my channel as well. You're supporting my content through those referral commissions there. So check that out if you're interested. Let's dive into the video here. So we'll start out with the most important thing, and that is the weekly candle, right? Now, the weekly candle closes in 13 hours. And the reason the weekly candle is so important is because, well, there's a couple reasons actually. But the main reasons, I'll give you the main reasons the weekly candles are so important is because we have seen a dip on this weekly candle into a zone of massive support, right? The bull market support band, a massively important price region, even on the deviation below it we saw, which was slightly abnormal, because this is, again, this is a level, and you know about it, I speak about it all the time. This is a level that holds up very well historically. We go to the 2017 bull market, it holds the entire way up. In fact, that was one of the easiest bull markets to trade because all you needed to do was look at where the bull market support band was and buy every single time we went down to it. And that was easily identifiable from about the third time we did it. And even moving through Bitcoin's price history, again, same story in 2021, and same story for a lot of the move upwards here since 2023 January, minus one singular deviation. And even on that deviation, it acted as resistance, so it still mattered on multiple occasions, right? So the fact that we've dipped into this bull market support band on the wick is actually good news because it means we have formed a base to rocket to the upside from. And it also means that we have flipped it for support, right? If we go upwards here and we see a good weekly candle close and the wick goes into this bull market support band and then we go upwards from there, it means we've flipped it for support, we've formed a good base, and we have extra liquidity to move to the upside with a greater strength. So what we need to be doing is we need to be closing above it. And that doesn't seem like it's much of a problem at all. I think we will. I certainly, I'm very confident. I'm not certain, obviously, you can't be certain, but I'm very confident the weekly candle will close above the bull market support band. But then we take it a step further. Well, that's an easy task, right? The bull market support band is 3 or 4% downwards. It's a long way away. We're quite likely to close above it. What is a bit more of a challenge is closing above this descending resistance line on the weekly chart, because that is, of course, a breakout line. And if we break out from that line, that means the bull market support band retest was valid, and we will have the momentum to skyrocket to new all-time highs. Okay, so what I'm looking at mainly is not only the bull market support band, but also this descending yellow resistance line. And again, I think it's likely we break that as well. I do think it's likely we break that as well. So the question is, well, where do we need to close above, right? Where do we need to close above on the weekly chart to get a decent weekly candle close? Well, that's going to be 67.5K. Now, let me discuss that a bit more in a second, but I want to bring up the third reason why the weekly candle close is important first. And that is because if we see a good weekly candle close, we will be seeing a confirmed buy signal on the hash ribbons, right? Now, hash ribbons are very important. Historically, they have been. It's a very important indicator. All we need to do is go back in Bitcoin's price history and mark lines where we have seen those blue circles. So let's go ahead and do that. We'll start out way back here from the first blue circle, which is the buy signal. Mark a line. It led to an upside move. Right here, bang, 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 upside move. Another one here, upside move and bull market, right? These occasions here were the times it didn't really work too well. We just kind of went sideways. I mean, we did see a pump. It was a significant pump. We basically 2x'd on Bitcoin, but it wasn't a macro pump. Same story here. We saw a hash ribbons cross. Again, significant pump, but it wasn't a macro pump. So even on the times it didn't work, it still led to pretty significant pumps. And then we look, we go forward to the next cross, which was a 4-year gap between 2015 and 2019. We saw one here at the bear market bottom. It marked the bottom. We saw one in 2019. It led to a big pump to the upside. COVID obviously stuffed that one upwards. And then we saw a couple pop off throughout the early stages of the bull market, and they all preceded the bull market in 2021. And every single one since then has been bullish. July 2021 marked the bottom, led to the all-time high. This one here led to upwards moves. Right? Point is, all of them, pretty much without fail, have been bullish. Right? So the problem is, well, all of them that have actually worked have been bullish. But what you'll notice is that some of them haven't actually played out properly. So we've got a few occasions here where we've seen the early stages of a hash ribbon, and then it actually just kind of folds over and rolls over. A great example of that was over here in 2022. We saw the early stages of a hash ribbon cross, and then it rolled over, right? The price couldn't confirm it. We couldn't go high enough to confirm that cross. And so we actually went downwards in price action and formed the new bear market lows. So why is the weekly candle important? Well, it's important because if we see a bad weekly candle here, not only would we fail a breakout of this resistance line, we also would fail the hash ribbons cross. And if we do that, we have a chance of rolling over, just like we did back here in 2022, which was very recent in regards to how rarely you see these indicators flash. So now that we understand the importance of the weekly candle close coming very shortly, we can quickly dive into, I guess, the level we need to close above. Now, as I said before, I briefly mentioned it, 67.5K would be ideal. If we zoom into the shorter term charts, we can see a ascending support line. I'm going to make it pink so you can see it, which you can watch in the meantime. That is a level we want to be holding. Dropping below that level will mean we are in an active breakdown, and that's when you really need to start paying attention. As long as we're above that pink line, there's no threat at all. The threat only begins when we go below that pink line, because that means we're kind of in danger. We're in an active breakdown, and we need to make sure, we need to watch to see whether that weekly candle close actually succeeds or not. But right now, I'm not too concerned about the weekly. 67.5K is the top of this mid-range support zone, and right now it's holding up quite well. If we do dip into the range itself, we do have various support zones within the range itself. We have support standing all the way down to 66, right? So, it's not really the end of the world. But what would be absolutely ideal is closing at 67.5 or above. That would be ideal. That would be the cleanest close we can see, right? That's where the daily candles have cleanly closed in the past. For example, a swoop of the lows over here closed right on top multiple times of 67.5. These wicks all touch 67.5. If we want the cleanest weekly candle, we want to be closing at that level or above that level. And then we can, start the bullish momentum back to the upside. Now, the reason we've seen such a weird kind of price action, such a weird kind of surge, and then drop back downwards, and then big long candles is because of, again, the Bitcoin events has been holding the USA. That has jumbled around this price action quite a bit. It's led to some inconsistencies in the price action. It's why I've been ignoring short term quite a lot over the last couple of days. Hasn't really been a pressing matter for me personally. I haven't been trading over the last couple of days for that reason. I just don't like trading, super high volatility in unpredictable environments. I don't like trading events where if someone says the wrong word on stage, you're going to lose all your money. It's just a terrible idea. But frankly, we don't need to get into this too much. I don't really have too much to say about short term, medium term. All I know is that as long as we're above that support level and we close the weekly candle above that support level, looks fine to me. Now, unfortunately, Ethereum and the total 3, which is Ethereum and the altcoin market cap, they don't look too good, unlike Bitcoin. Bitcoin looks okay. Bitcoin looks good. These charts don't look that great. And this is really my concern right now. Ethereum, unfortunately, has broken below a critical resistance level. And not only that, apologies for that, not only that, but it's rejected from it. So we've come down, we broke below it, and we've come upwards. We're rejected from that level. We went into it briefly, and we got knocked right back down. Exact same things happened on the total 3, coming upwards into the bull market support band, and then rejecting from resistance at the top of the bull market support band and also a horizontal level, and forming a potential head and shoulders pattern. So this is why I said at the start of the video, there is going to be a degree of uncertainty in my tone today. I'm not on the bullish medium-term train fully yet, because how can I be? If Ethereum is right on top of resistance, and so is the total 3, and then Bitcoin's just hanging on, it's not exactly an idealistic scenario. So hopefully these weekly candle closes can clear up this situation a little bit, because we're going to need some clarity here. Unfortunately, we just don't really have it right now. and anything we can get, like a weekly candle close that ends up well, that will be very much appreciated. Thank you, market. Thank you, market. Anyway, moving forward to the ETFs. I said I'd briefly discuss it, and I will. Now, ETFs, in my opinion, are one of the biggest disasters that's ever happened to cryptocurrency. It's certainly screwed up this cycle quite a lot. We saw massively inflated price action way too soon, and it led to massive volatility for just throwing Bitcoin and throwing cryptocurrency off its cyclical pathway. I do blame the ETF decisions for essentially this deviation right here below 61K. I don't think that should have happened. All the indicators that typically hold in the bull market, including, again, the bull market support band, broke down in that drop downwards. I don't think it needed to happen. I think it happened because of the overvaluation by ETFs. I think the fact that the price moved so high to the upside meant the indicators were dragged much higher than they needed to be, and it left no room for any sort of reasonable correction, and so they had to break. And this has not only damaged the cyclical reliability, but it's also damaged the reliability of certain indicators, such as the bull market support band. I've said that word like 10 times today. So I don't like ETFs. I don't think they've worked. I don't think they've really done anything positive for Bitcoin either. First and foremost, why do we want hedge funds owning huge swaths of the Bitcoin supply? That's number one. Number two, it opens up regulatory pathways to banning exchanges, because now there's a safer way to hold cryptocurrency for ETFs. That's number two. And number three, the inflows haven't even been that good, right? We look at the inflows in the Bitcoin ETF, and they've been like mixed. Like, it's been slightly bullish, right? It's not been that good on a net level. Like 40% of the days this ETF's been out, we've had negative inflows. So let's not act like it's single-handedly led to this pump. No, the people buying because of the ETFs is what led to all this positive price action. The ETFs themselves didn't do anything. The ETFs themselves is copying Bitcoin price action. When Bitcoin goes down because of TA, the ETFs go negative. When Bitcoin goes up because of TA, the ETFs go positive. It's just like an extra buyer in the market. It doesn't really do anything. It's not like letting heaps of money into the market, unfortunately. Again, it does have a slightly positive effect on the price, but it's really not justified. It's taking up, it's a small percentage of Bitcoin's trading volume. It's not a massive thing like people made it out to be. I knew it wasn't going to be. I publicized on this channel. Not many people wanted to listen. People were on a bullish bandwagon. They were blinded by rose-tinted glasses. And now exactly the same thing's happening with Ethereum. Ethereum's come out, the ETF's come out, and it's seen negative inflows off the bat, right? It's because the Ethereum chart is bearish, right? It doesn't matter where the money comes from. It doesn't matter what the avenue of the money coming into the market's going to be. ETFs, exchanges, doesn't matter. If the TA is bearish, no one's going to buy, right? So it's all about TA at the end of the day. People don't just blindly buy because it's an ETF. That's not how things work. So no, I don't like ETFs. I think they're useless. And I don't think the Ethereum ETF is a big deal, as much as I don't think the Bitcoin ETF is a big deal. The only things they've done in this market is destroy things and made things less predictable for me as an analyst. So I don't like ETFs in general. And I don't think that having them is going to... Yeah, I think it's already been proven. It's not even a thought. It's just a fact. Having these ETFs here is not going to send Bitcoin to $1 million, right? If Bitcoin's going to go there, it's going to go there with or without the ETFs. So that's the reality there. So I'm not a fan of ETFs, and I don't think the Ethereum ETF, first of all, hasn't even done anything to the Ethereum price. I mean, Ethereum's in the same price region than it was when the ETF released. So look, it's not a big deal, really. I kind of wish this ETF obsession will go away. I think it has. To be fair. No one's really talking about the Ethereum ETF, even though it just released. So again, bringing it back to the main point today, just rambling here. Weekly candle close is what matters. As long as we see it above support on Bitcoin, above 67.5 preferably, that's great. Everything else is irrelevant right now. That's the only thing I'm kind of watching at the moment. There are a few threats developing. Ethereum below support, total 3 below support. We really want to be seeing those threats go away as soon as possible. If we do start rejecting here, if we do see Bitcoin crashing deep into its support zone and these drops continue on Ethereum and total 3, that's a situation in which we start to get a little bit uncomfortable. And we can discuss that if it occurs. But right now, it's very clear. We just need to be watching this weekly candle. So I'll give you an update on it tomorrow. Guys, thank you for watching. Hope you enjoyed. Go ahead and check out the VIP group on Telegram. We trade altcoins 4 times a week, and we also give you access to a group chat where you can discuss the market 24/7. Now, in those altcoin trades, I give you my buying zones, selling zones, stop loss zones, all in a video format. You can chart them up and copy my videos there, and you can find some utility in those trading plans. We also have a PDF of all the historical trading results. If you want to see our track record, you can do so. It's on Telegram, 78.39% win rate. Very good stuff. Go ahead and check out my second channel. I'd appreciate that. we did a podcast, or I did a podcast a day ago, and all the videos are right there. You can see the channel name is JS Quinn, and the link is down below. Check out that podcast. You know, I think it's quite good, and I'm going to be posting more on there over the coming months. So check it out if you're interested. And then finally, the Crypto Academy's Become a Trader 10 Unit course is on sale. If you are interested in the sale, you can take advantage of it, right? The website shows you all the information about the course. Read up about it. Read the blurb. Read the unit topics, right? See if you're interested. And if you are, send us an email. Our email address is on the website, and we'll give you some more information in that email address. There's no lock-ins for anything. If you just send us an email, completely free of charge, we'll get back to you shortly. We'll answer your questions. So do that. Guys, thanks for watching. Hope you enjoyed. I'll catch you soon. Cheers.